Yeah, it's a huge kind of 180 turn for Ford. You remember, they were probably one of the first Western automakers to actually introduce EVs. You remember the Mustang Mach-E, the Ford 150 Lightning, and they're still selling well, but I think they're actually bleeding quite a bit of money. In the last 12 months, they've lost 5 billion on EVs. So, I think, they need to revisit and see, instead of a market leader in EVs, they probably needs to, step back and maybe become a follower until the market recovers.
And just looking at its stock, Paul and I were talking about this earlier. The ticker symbol is F for Ford. When you see the drawdown that it had from that peak that we did see earlier in July, it dropped as much as actually 33%. Now it's about still a ways from that peak that we did see. But what is it that shareholders really need to hear in the messaging from Ford in order to turn that stock around?
Yeah, a couple of things. So, like today, the stock is really not reacting to this news. I think what the investors are looking for is really similar to what GM and Stellantis has done, which is buy back stock. They want to hear that they're gonna, use the cash, use some of that cash that they're conserving from cutting back R&D and buy back some stock, return some of that to the shareholder. So, I think that's why the stock hasn't moved that much today in reaction to this news.
All right, Steve, this kind of goes to the heart of the matter, I think, for me and probably a lot of investors in this auto industry is what really, at the end of the day, is consumer demand for EVs. Is it fair to say it's not as much today as maybe the industry thought 2-3 years ago?
Yeah, I think the estimates out there in the past were probably a little bit frothy. Like we're actually expecting, penetration to be around 25, maybe 30%. By 2030, but other estimates out there were like 50, 75% penetration rate by 2030. It's a little bit too aggressive. I think we're just coming back to reality from the hype we have. But the other thing is there's a lot of competition out there, right? The Chinese are really looking to, compete with the legacy automakers on cost, on technology. And that brings up another question that I think investors have in their mind is this the right strategy for Ford to step back at this moment? Should they be doubling down, right? Investing more and really compete at a global level. So, so hopefully that answers your questions.
And you've written about, too, when it comes to Ford and the rising inventories, as well as the increasing price competition when it comes to a profitability headwind here. What do we know as far as what the rest of the year could look like when it comes to those earnings calls that executives have talked about?
Oh, there's a lot of risk in the second half. I think we're heading back to pre-COVID levels, with the supply chain smoothed out. They have been ramping up production, and at the same time, interest rates are still high, right? There are talks about cutting interest rates to help out the consumers, but we haven't seen that yet, and it probably needs more than a couple of cuts before we get to a point where a consumer gets more excited about buying a much more expensive vehicle today than it was 3 years ago. Average price for a vehicle is $50,000 now. Is not 35, it's not 40, it's 50,000. So, monthly cost is a lot higher for consumer. The cost of acquisition, the cost of ownership is much higher today than before.